A lot of news about the U.S. economy on this Tuesday. Hiring slowing in May. Private sector payrolls increased by just 37,000, and that's lower than all of the estimates in a Bloomberg survey of economists. And we're also getting those headlines right now from the Beige Book. The Fed saying U.S. economic activity has declined slightly. Employment little changed since the previous report. As we get all of this, we're going to bring in Catarina Saraiva, Bloomberg News Federal Reserve and economics reporter. She joins us now from Bloomberg's bureau in Houston. Can we get your live reaction to the Beige Book? I mean, it really just came out like 15 seconds ago, Catarina.
Yeah, that's right. But what we're seeing, seems to indicate that it's a pretty similar report to what we've been seeing this year. It's showing that businesses and consumers are kind of waiting to see, not making huge decisions yet, kind of waiting to see how this tariff fight plays out. You can see that activity declined slightly, but nothing major there, and that the labor market and inflation are kind of going along, kind of steady state as they have been.
I did something cumbersome here. I did a Control F, just look to see how much tariff appears here in this document. 122 times in total, and it's a kind of scan just to see what's happening in different regions across the country. So many of them saying here economic activity declining modestly, speaking to that level of uncertainty, maybe some hesitation among businesses as well. Catarina, how does the Fed look at this release in particular? Of course, it has that panoply of data, both hard and survey data it's going to look at when it meets in Washington in just a little over a week. How much credence do they give this kind of anecdotal data that's been collected by the Federal Reserve banks all across the country?
I think right now they give a good amount of credence to this type of data because the hard data, right, the indicators that the government publishes on a monthly or quarterly basis are just that. They're about a month or a quarter behind. So data like this that's showing kind of what's happening on the ground can be really valuable for Fed officials, especially right now when there is all this uncertainty.
I feel like we've been talking for so long about weakening consumer sentiment, and you see it cropping up in corporate earnings. You see it just in terms of the data that we're getting. If you look here in the Beige Book, it does say that consumer spending increased slightly in recent weeks. Retailers reported steady to increasing sales. They noted a decline in big ticket purchases. As someone who studies the economy closely, what's your current take of the state of the consumer in the U.S.?
Yeah, I mean, it's really interesting, right? Because we heard a lot of concern when tariffs were first announced that this was really going to hit consumption. And the consumer, of course, has been a massive driver of the economy. I mean, it's like 70% of our economy. So it's very important. But we haven't seen that weakness materialize. Consumer sentiment was very negative in April, but that turned around in May. And people are attributing that to, some of these pauses on tariffs and just kind of more optimism that deals are going to be reached. So it's been a really interesting story because the consumer has stayed strong. And I think a big part of that is the labor market, right? People still have jobs, so they can spend.
You look at all of the sections herein, there's trade and services, there's manufacturing, there's a portion on prices as well, and that's where I'd love to go next. There's a line here. When asked about anticipated changes to their industry's costs over the next 6 months and how they expect their competitors to respond, more than 2/3 of those firms surveyed anticipated increasing costs and expected their competitors to increase prices in as little as 2 months. That, of course, is such a huge part of the narrative surrounding this trade war and the underlying uncertainty. Could you dovetail that with what we've heard from Fed policymakers, presidents, and others here in recent weeks just about what concerns exist about the kind of unanchoring of or kind of dissolution of inflation expectations?
Yeah, I mean, that is of paramount importance to them. If inflation expectations, especially in the long run, like how people think about inflation in 5 years, if that becomes unanchored, if that basically goes higher than around that 2% level where the Fed likes inflation to be, then that completely takes away the Fed's ability to control prices even in the near term. And then that's where the trouble really starts. That's where you have to see either rates stay at these levels for longer or potentially move higher, because they are really going to want to get that under control. But so far, we haven't seen that in most of the measures. We've seen that a little bit in the University of Michigan data, but other measures, including market measures, are showing pretty stable inflation expectations.
Catarina, I want to get to your story that you published today with Katanga Johnson about Trump's pick for the Fed's top bank cop, Michelle Bowman. Tell us about who she is, how important this is for Wall Street to have her as the vice chair for supervision.
Yeah, so she has been a Fed governor since 2018. So she's been at the Fed, for a while. She speaks a lot. So she's made a lot of speeches, detailed speeches on bank policy, where she thinks that should go, and on monetary policy. So her views are very widely known. There's, not really going to be any surprises here, probably. And she is a supporter of a lighter approach to bank regulation. She was came out against Barr's proposal for increased capital. She's kind of aligned with kind of the industry when it comes to that. But she is also someone who is pretty outspoken about good supervision and kind of staying strong on that front. She wants to do an independent review of what happened with SVB, with the SVB collapse. So she is, while she has kind of a lighter approach in terms of regulation, she is, pretty dedicated to still supervising the industry in a rigorous way.
I was so interested reading this profile that you wrote with Katanga Johnson, and something that really stood out as you wrote about Mickey Bowman's rise is the way in which she kind of paved her own way here to get to this position. Talk a bit about that, and I know that we've seen some quiet here when it comes to the president bad-mouthing Fed Chair Jerome Powell, but does she represent the kind of prospective Fed chairman that this president might like to see in that seat going forward?
You mean for the chairmanship or for the vice?
Yeah, for the chairmanship, just in terms of leadership of the Fed, sort of what does she represent? I know that she's sort of out of mode with the terms of kind of traditional academic economists that have been on the board in recent years.
Yeah, but I think, if that were, once I think they're going to start looking to replace Chair Powell in the fall. His term ends next year, so they will start looking around for a replacement for him. And I think her name will probably, be in contention for that. She is already on the board. She's kind of proven herself to be, a dedicated policymaker. But I think that her name could be in the mix. But I do think they want her for this supervision post because she is, I think, quite aligned with how the administration thinks that bank regulation and supervision should be approached. So for that position, I think that there's, we've seen, obviously, the administration felt confident in nominating her, and she's expected to pass through the Republican-controlled Senate, perhaps even this week still. So I think that is something that where those folks are supportive of her.